Hi everyone, good evening. Welcome to On the Money, my daily brief. I want to talk today about the recent CBN NPR meeting. So there's this meeting the NPR has, MPC meeting rather. It's called Monetary Policy Committee meeting, where they sit down and then they discuss matters relating to the economy, especially foreign policy. They do this once every month sometimes, or once every 2 months. It all depends, but usually not later than once every quarter. And the CBN governor and the deputy governors and other members of the Monetary Policy Committee, they meet and then they decide on matters of the economy. And typically at the end of their meetings, the decisions are usually around whether to keep interest rates up or down, whether to allow banks keep more money or not. That's usually the fallout of those meetings, and then they try to explain the reasons behind their decisions. So yesterday they agreed to cut interest rates from 13.5% to 12.5. Sorry, to 12.5%. I hope I'm not mistaken. So what does this mean for you and I? What this means essentially is that when the CBN determines what monetary policy rate that we're going to use, what it's basically saying is that the rate at which banks lend money, to the CBN, and which the CBN lends money to banks, is now going to be at that NPR rate. So it's called the monetary policy rate, NPR. So if the NPR, if the CBN thinks that the NPR, should be X amount, they are basically telling you where they think, interest rate should be. So they cut interest rate from, 12.5%. Did I say 30.5% before? Sorry. So from 12.5% to 11.5%. Yes. It was 13.5% in May, and then they cut to 12.5%, and then from 12.5% to 11.5%. So typically in most countries, when the CBN says that they've cut interest rate, it's a big news. It's greeted as a big deal because it means that whatever, our loans, right, from banks would now be reduced as well. So if the interest rate your bank is charging you maybe for your mortgage or for your car loan is 19%, then you would expect that it should drop to 18%, right? Because the monetary policy rate has been cut by 1%, which is 100 basis points. But in Nigeria, it doesn't always work like that. So the banks sometimes might want to implement this, but banks look at a whole lot of other things to determine whether to remove their rates or not. But what is actually more interesting to people like me who track the economy a lot is, why is the CBN cutting interest rates when inflation rate is actually going up? So that's like a contradiction, right? And I can explain why. When interest rates are high, it's often the case that monetary policy rates will be higher than interest rates. And the CBN does this because if the cost of borrowing is very high, right, then people won't need to borrow money, and then there won't be monetary expansion. There won't be a lot of money circulating in the economy. And economics believe that when this happens, the inflation rate will now trend downwards. But in its decision yesterday, the CBN sort of admitted that the high inflation rate that we're seeing today, it's not because of monetary policy. It's more structural. The thing is that we don't like to use all this big grammar. Structural basically is that inflation is going up today because of things like border closure, because of the government's decision to devalue the naira, because of COVID-19, which has caused a lot of supply chain issues. Supply chain issues means that goods can't get distributed as quickly as it used to. You can't import things as quickly as it used to, as much as it used to before. And then most recently, which hasn't actually reflected yet in the inflation, is the increase in cost of fuel and the cost of electricity. So those are structural issues, and no matter what you do with the monetary policy, it's not going to change those things because they are here to stay. I mean, electricity prices has gone up from 20 something naira to 50 something naira. So what's there to change? There's nothing. There's no. You can't. It's not going to go down. It's there. and those are structural issues. So the CBN is basically saying that they can't take rates lower. Sorry, they have to take rates lower because keeping it high is not going to do anything to inflation. It's almost like as if they've basically given up on inflation because a few years ago, I remember, I think one of my briefs, and a few years ago, the CBN actually did, pursue a monetary policy that increased MPR and then increased their own rates so that anytime you bought treasury bills, remember back then when you buy treasury bills at like 16%, 17%, 18% interest rate, 12% at some point, and then 14%. So all those kind of double digit rates basically. And then OMO bills 18% for some people, 17%. So, but those days are gone. They're long gone because the CBN is saying, look, you know what? Those rates are just abnormal. So that's why today you see interest rates at very single digits. And that's really what the CBN is targeting. They want to move rates down because they've sort of realized that, and this is what some of us have always been saying, the inflation rate in Nigeria is completely disconnected to the monetary policy. There's nothing the CBN can do to reduce inflation rate. It's really out of their hands because what drives prices of goods and services in Nigeria is not necessarily lending or interest rates. It's structural issues. The man who plants cassava and grows it, even if it costs him 10 naira per ton, you're right. By the time he brings it down here, half of the cassava is probably spoiled because of distribution issues. Transportation cost is high for him, and then the truck might break down, so some of his things might get stolen, and then maybe they might, the policemen or guys on the road or area boys would obtain the truck driver. So all this cost gets built up on the cost of the cassava that you buy at the end of the day. So you're basically subsidizing. Remember what I talked about subsidizing in one of my other sessions? You're subsidizing for a lot of inefficiencies in the system, and that's why things are expensive. So it's not really that we can't get things, down. So the CBN is saying that really is the problem. Okay, hello, welcome. But what they want to now do is, rather than start to hold on jealously to monetary policy rates, they now want to start to fund, supply chains, like spend a lot of money on funding projects, hoping that would drive down cost. That's really what the Ministry of Finance should be doing. But I mean, we live in a world where Ministry of Finance doesn't really have money like that again. So CBN is who has money now, and that's why they are basically funding everything. So where does that leave you and I? So basically, I mean, if you are into production or local production, and you're in one of those industries that the CBN is looking to fund, what are you doing? You better start to figure out how you can key into some of these things. Like, how do you find your way into, also accessing some of those funds? Because I'm hearing that they're looking at giving out loans at 5% interest rate. That's great. So if you can do that, you're right, then maybe you can start to force down the cost of producing things that you sell, and that's what they want to do. It's going to work. I don't know, maybe another session we'll discuss whether their plan is going to work, because Nigeria's structural issues is just endemic. Are you going to tell the policeman on the road not to stop your truck, or the area guys who just have gates, or the different taxation that you have around, or the guy in customs who is just looking to increase your cost of clearing your goods, or the clearing agent who just wants to rip you up? How are you going to do all that? Or the roads that are bad that you need to now transport your goods, and then half your goods are spoiled because the roads are bad and your truck driver or your truck has just broken down. Who's going to fix all those things? That really is the problem, right? And then how seriously is the country taking food security? So those are the real issues, though, and that's really, so that basically is my daily brief for today on the money. And that's it. If you've got maybe something around the economy you want me to maybe explain, just drop your questions and I'll try as much as possible to explain. That's it for today. So enjoy the rest of your evening. Bye.